Hi everyone. Today we're going to talk about bonds, what they are, and the different types of bonds that exist. A bond is a financial instrument that represents a loan made by an investor to an issuer, such as a corporation or government. The issuer promises to pay the investor periodic interest payments and to repay the principal when the bond matures. Now, let's take a look at different types of bonds. The first type of bond we'll talk about is a government bond. Government bonds are issued by national governments and are considered to be among the safest investments. They're backed by the full faith and credit of the government, which means the government promises to pay the interest and return the principal when the bond matures. The next type of bond is a corporate bond. Corporate bonds are issued by corporations and are considered to be riskier than government bonds because they're not backed by the government. However, they often offer higher interest rates to compensate for the added risk. Another type of bond is a municipal bond. Municipal bonds are issued by state and local governments and are often used to fund public projects, such as schools, roads, and bridges. They're considered to be relatively safe investments and may offer tax advantages for investors who reside in the state or municipality where the bond was issued. The fourth type of bond is a Treasury Inflation Protected Securities Bond, or TIPS. TIPS are government bonds that provide protection against inflation. The principal amount of a TIPS bond is adjusted in response to changes in the Consumer Price Index, which means the interest payments and the maturity value will increase with inflation. The fifth type of bond is a zero coupon bond. A zero coupon bond does not pay periodic interest payments. Instead, the bond is sold at a discount from its face value and the investor receives the full face value when the bond matures. Finally, we have high yield or junk bonds. High-yield bonds are issued by companies with lower credit ratings and are considered to be riskier investment-grade bonds. They offer higher interest rates to compensate for the added risk. In conclusion, bonds are a great way for investors to diversify their portfolios and generate income. Whether you're looking for a low-risk investment or a higher return, there's a bond out there for you. I hope this video has been helpful in understanding the different types of bonds. Thanks for watching.